So yeah, let's start. So good afternoon. My name is Miguel. I'm a member of the board of directors of CFA Society Portugal, and I'll be the host of this event. For the ones that have been following us, we have been doing more or less one event per month. Sometimes we don't do it every single month, and of course during the summer vacations we didn't do any events. So the goal is to talk about one financial profession, and we take into account that a significant part of the audience is from universities, so our questions are tailor-made, taking that into account. So the profession of today's session is real estate investment management, and we have three guests. I think someone is not on mute. I'm going to mute manually the people that are not. Just give me a second. Fine. I think now is, yeah, I think I've muted everyone. Yes, so today's session is about real estate investment management. And we have three guests as always. And let me first thank to CFA Society Spain for partnering up with us to do this event. This is the first time we do this event with a partnership with other society. I hope it's the first of many. I think it's much more useful. Even to myself, I learn much more if we have people from other countries sharing their experiences. I think this is going to be a very good event just because of that. I'd like to thank all the attendees, and of course the universities that promoted this event, and of course the three speakers. I'm sure they have very busy agendas, and they took 1 hour of their time to come here, and they're going to share their experiences with all of us. I think we should be very grateful for this. So let me introduce the speakers. I usually start with the person with more years of experience, and that's Alejandro Rodriguez Carmona. And I have to say that I practiced this. Sorry? I practiced your name because it's not easy to pronounce. We have all the R's from the Spanish language are there, and I practiced a little bit before saying. I hope I did it right. Alejandro has a very vast experience. He has 33 years of experience, so it's impossible for me to describe it all, but I'll try to summarize it the best I can. He was a financial analyst, including at Deutsche Bank, Lehman Brothers, and Mercapital. He was also, and I'm going to summarize this way, founder, investor, owner, CEO, or advisor of several companies across a wide range of industries, specializing in corporate finance, strategy overhauls, and in the management and restructuring of companies under financial distress. He also was a professor at Instituto de Estudos Bursátiles for 14 years, and MD and CFO of IMF Business School for a couple of years. Today, he's the founder and CEO of Habit Living, which is a real estate investment management company. He has a BA in Business Administration and Law from Comillas Universidad Pontificia, I think I said correctly, and an MBA from Harvard, which had a focus on finance and entrepreneurship. He also is a CFA, and he's also very engaged in CFA Society Spain's activities, being a member of the Governance and Nominations Committee, and also a founder and chair of the Alternative Assets Committee. Let me introduce now the second speaker, Antonio Simontalero. He is today the CBRE's country manager for Spain and Portugal. CBRE is a very large global real estate investment firm, which is present in over 100 countries. In Portugal and Spain, CBRE has over 4 billion euros of assets under management, and he has been with the firm for 12 years. He's also a member of the firm's European leadership team. Before that, he worked at ING, which is the Dutch bank, real estate investment management division. He worked at McKinsey and Accenture. Antonio holds an MBA and a Master in Law from Universidad Pontificia Comillas. He's also a CFA, and is also engaged in the activities of CFA Society Spain, being a member of the Alternative Assets Committee. Finally, we have José Miguel Marques. This is easier for me to pronounce. He's Portuguese, and he's the CEO of Carregosa SGOIC, which is a manager of real estate funds. He previously worked at Banco Carregosa and Banco Espírito Santo. He studied economics at Faculdade de Economia do Porto, holds a postgraduate degree in real estate law from Universidade Católica Portuguesa, and holds an executive master in management and banking from Católica Porto Business School. He's also a CFA, and he's also engaged in the CFA Society, being co-head of everyone's introduced. If you allow me, I'm going to start with the questions with a round table, and I would start with a more generic question. I would ask to every single of you to describe your firm's business. What's the business model? In which type of properties does it invest? Who are the clients? And if I maintain the same order, I would start with Alejandro.
Okay. I'm currently, like you mentioned, running my own personal real estate investment firm. We invest in value add opportunities, meaning that we try to buy cheap to get good returns. So we are looking for probably opportunities that are a bit more risky than some other players, and we are active in residential and in hospitality, being hotels and tourist apartments in Madrid and in the south of Spain in Malaga. We also own a co-living space, and we have a very small structure. We have started managing other people's money last year on value-added opportunities in the same space, and so this is basically what I'm currently doing on the real estate side.
Thank you so much, Alejandro. Antonio, do you want to?
Yeah, sure. Thanks, Miguel, for your kind introduction and inviting me to this webinar. Sure. Well, I work for CBRE Investment Management. As I said, CBRE Investment Management is the investment arm of the CBRE Group. And what we do is we are an investment manager that work with real assets. So that is, we work not only with real estate, but also with other type of real assets like infrastructure. We invest with different strategy from equity to debt, direct real estate, indirect real estate, and listed. Although in Iberia, our focus is mostly on direct real estate and non-listed. Okay, we don't have any SOTIMIs or any listed vehicle. Where do we invest? We invest almost in all asset classes. We have a long track record investing in retail, in logistics, and also in residential and offices. We invest in different type of strategies in terms of risk. We do core, we do value add, and that is where we focus most of our investments. And in terms of our presence in Spain and Portugal, we have been operating since the 90s. At the time, it was ING Real Estate, as you said, which was later acquired by the CBRE Group. And we manage around 4 billion in Spain and Portugal. Our let's say our office is in Madrid, but we have several investments in Portugal, in logistic, in shopping centers, and have been in the market, I would say since late 90s.
Okay, thank you so much, Antonio. José Miguel, do you want to?
Of course, thank you very much. Carregosa SCORC is a quite young asset management firm. We started 3 years ago, and we are now managing 10 closed-ended funds, actually 5 closed-ended funds, and then 6 sociedades de investimento coletivo, which are the former SICAFIs that are perhaps more known. The five funds, they are thematic. That means that we have one that invests in retail, other in offices, other in warehouses, other in senior housing, and other in hospitality. So we are quite fragmented in terms of the sectors we invest in. And then the six are well, more diversified. They are not specific in their investment policies. Well, and they do retail, warehouses, and also residential. So essential commercial, something also in residential. That's where we are now invested. Our business model, well, as a firm that whose major shareholder is Banco Carregosa, which is a bank, a small bank, also focused in private banking and wealth management. So most of these funds are distributed to the bank's clients, and then the six have other type of strategy. But of course, we are always talking about giving service to family offices and so on. So our business model is having focus, knowing very well the Portuguese market, and bringing solutions to wealthy people that, of course, need some expertise in these areas.
Okay, thank you, Jose. Actually, a follow-up question before going to the next one. When regarding the real estate that you own, that the funds own, how active is the management of the properties? Did you rebuild spaces, or you just buy and lease? Can you talk a little bit about that? We have all different kind of strategies going on. I'm not sure. Maybe Antonio, could you talk a little bit about that?
Yeah, for sure. It's I would say that for every investor in real estate nowadays, it has to be very active. You know, it doesn't matter if you go for more core investments or more value add or even opportunistic, for sure. You need to have very good operating teams. You know, in our case, we have a model that is called the investor operators, meaning that obviously we are an investment manager, so our job is to deliver returns. You deliver return by, you know, generating additional income stream via rents or increasing the value of the asset. But for doing that, you need to operate the underlying asset, which is the building. It can be a logistic asset, it can be a shopping center, it can be a hotel, whatever. You need to act very actively all the time, you know, because real estate is real asset that require capex. We are talking about places that people live or people spend their free time, or and at any time you have to be thinking continuously about how to improve it, you know, how to make it better for your tenant, that at the end of the day is also your client. You know, is the client of an investment manager is the company that puts the money so that we can invest, but our occupier is also our client, and you have to be actively managing this relationship with them and everything that happens in the asset. So the clear answer to your question is yes. Very active in any event.
Thank you, Antonio. Jose, Alejandro, you want to add something?
In my case, it's very similar. You know, we are buying to generate this value add that we both, Antonio and I, mentioned. You know, you normally need to buy assets that are not fully performing, where the rents are low, maybe because there has been no capex in the past. And you know, all the residential buildings that we have bought, we have completely renovated all the apartments. Of course, there is day-to-day problems with the people living in the apartments. You know, another asset that we bought was an industrial asset in the middle of Madrid, and we converted into a co-living space. So we had to change the use of the land, which, you know, in some places you can do it, in some others you can't. And so it's a fairly intensive endeavor to do these things. And we have a much small. I mean, we are a family-owned company, and we rely on outside contractors. We don't have an architect. We don't have people taking care of the construction. But we rely on operators that are specialized in managing co-livings or in managing hotels or in managing tourist apartments. So, we try to be lean, but there is definitely a lot of work to be done to take out the use of the assets.
Okay, thank you, Alejandro.
And now that I have investors, I have also to report, and you have to present the pitches on the opportunities. So I mean, it looks, people in the US and more and more in Europe talk about passive investments, and really real estate is not passive. It's not that you buy an asset and it's true that at the end of the month you receive the message from the bank that you're getting the rents, but in the meantime you have to do a lot of work.
Jose Miguel, do you want to answer the same question?
No, I think almost everything was said. The point is, comparing with other asset classes, the difference is we're not buying and selling every day, of course, a new building, but you have to create value, even if it's not a value-added strategy. So you must always manage it actively. The only difference towards other asset classes is that it's quite different, because when you think of active management, you're always thinking about buying and selling. And here you must be very active, but creating value and understanding the drives of value, and not really buying and selling as you do with other asset classes.
Okay, thank you. So the next question is, could you describe the typical role of a real estate investment manager? I know you already mentioned a little bit, but you could also focus the answer on explaining how it changes as someone progresses in his career. Take an example of someone that leaves university and joins your firm, for example, and how it is expected for such role to be different at that stage versus a more senior role. I'm not sure. Maybe Antonio, you want to start? Maybe.
Yeah, for sure. Well, it's how to say it depends very much on the role, especially in a firm like mine, where you have, I don't know, research department, you have finance people and so on. But could say that in general terms, when a junior person join an investment manager, you could expect that to be doing like two things. Is obviously you are in a learning phase, and you will be learning a lot about what Jose Miguel was mentioning about how to add value to an asset. So you need to learn about the real asset itself, because you need to do things, there, you need to understand how the leases work, when do the leases expire, do I have the right tenant, do I want to change the tenant, can I change the tenant, what is the rental increase that I can achieve, how much capex do I need to invest. Obviously you are supporting in all these tasks to an asset manager or a senior asset manager, and in a way what you are doing is understanding how to develop a business plan for an asset. That for some people that do not work in this industry is difficult to understand. Like, okay, but you make a business plan of a building. Yes, indeed, you make a business plan of a building, because there are many things that you can do. And you can have a lot of effect in the overall return, meaning the rents, and what we could say the price of the rents, which is the capitalization rate, and therefore the value of the asset. So that is one thing, learn about how all that work in the asset, in the pure real estate. And then there is another component which has to do more with the investment and the investment proposal as such. There is also a financial component attached to this, let's say, a real asset component, which has to do with doing investment proposals, with calculating IRRs, equity multiples, even financing the investments. Okay, should I use debt here? Yes or no? How much? At what price? Should I hedge the debt? Yes or no? And all this, which is more financial and not so much related to the asset itself. And then as you progress in your career, well, it depends very much. You know, some people tend to specialize in asset management and others in portfolio management, which has to do with composition of portfolios, what is the right allocation in a mixed fund for logistic or retail or offices. That after that, it depends very much, you know, on what you do decide and what do you feel you're better at, and yeah, but those are the two basic things that you should expect to be doing when you join a company or at least a large investment manager.
Yeah, thank you. And I would guess that there are both kind of more technical roles or more financial roles and more, for example, sales kind of roles or relationship roles. Does that happen in a firm like yours? Or?
Yeah, absolutely. That's why I was saying that, you know, it was difficult to answer this question. I was trying to simplify, but yeah, you obviously have pure financial roles. We have CFOs in the company with deal with the capital structure of the vehicles, especially if we are talking about large vehicles, and how to structure the vehicle themselves. You know, how to do all the structuring and the different SPVs in which we put the different assets, how to raise the debt. We have other roles we had to do more with research, as I was saying. We have other roles that are pure technical because, yeah, we are dealing with real assets, and especially if you are doing value add or development, obviously you need to understand the whole process. So yeah, there are a number of different roles within an investment manager that you can do. But at the end of the day, as I was saying, an investment manager is that, you know, we have to deliver a return. So all that is being focused and on delivering a return to the shareholder, which is a combination of, what I repeated, the rent and the capital appreciation of the asset. And all the different roles are playing its part to achieve this ultimate goal.
Thank you, Antonio. Alejandro, I'm not sure if your firm is.
Well, in my case, I have a very small structure, so we have to do a bit of everything. But I think going to, you know, what you mentioned about the junior roles and the senior roles, I think as you grow wiser or as you grow older, I think it's very important to you know, sometimes it's intuition. You know, you see an asset and you say, you know, because you've looked at so many assets, you know, because at the end of the day, you have to do something with the asset. But, you know, having seen many buildings, you know, sometimes very quickly it clicks and, you know, I have to go this way. Of course, you know, you have to later do a model and, you know, how much are you going to spend? What's the CapEx going to be? What would be the exit strategy? But you know, I think it's very important for the younger guys, which I think it's more of the audience, that really to be able to have this intuition, this experience, this judgment. You need to have done it before. Maybe not necessarily in real estate. You know, I'm relatively new in real estate because I was running businesses, but you know, the businesses also had a real estate underlying. So, you know, I think the experience, and, you know, we haven't talked, but, you know, you are negotiating all the time, and this comes from experience. You know, when you buy the asset, when you're talking with the intermediaries, so they approach you in the first place and not in the last place, and you're negotiating with the tenants. I mean, it's a continuous negotiation, and, you know, having the people skills is also important. And somehow you have to develop them when you are junior to be able to be successful on senior roles.
Thank you. Jose Miguel, do you want to answer a question as well? How this is working?
Yes, it plays. Well, we are also a small firm, and myself, I'm a junior in the real estate because I also started a little bit more than 3 years ago. I have experience in the financial sector, but in the real estate, much less, of course. So I'm learning each day. What for me it's important and interesting in this industry is that you have, in my opinion, have these three perspectives. You have the strategy perspective, what you will do with this building, how does it work in your portfolio, which tenants you will have to have, third, what will be your exit strategy, and so on and so on. Then you have the technical perspective, because we're talking about buildings, and buildings have issues, and you must put capex in time, and so on and so on. And then you have the financial perspective, because it must be a good business by the end of the day. And the way we work is that we have different people that are more specialized in these three areas. And I believe that what is very important is that then these three perspectives get together and take decisions every day, talking with each other, because the richness of the decision will exist if all these perspectives or different perspectives are taken into account. So I believe for someone that is starting in this industry, there are different things to do, and we must be very humble and understand that we need people with different backgrounds working together, and that will perhaps lead us to have some success in this industry.
Okay, thank you so much. Just I'm going to ask the audience if you have any questions. You can write them on chat. Actually, there's something in the chat already. Oh, just someone saying good afternoon. But so if someone has questions, you can write them in the chat. Otherwise, I'll proceed with the ones I've prepared. And actually, I can do a personal question right now and ask you what drew you to the field of real estate investing? What made you follow this path? And if I can change a little bit of the order, I'm going to start now with Jose Miguel. So you started three years ago. How do you end up here?
Well, actually, a little sooner. I was working in Banca Rosa, said, in private banking, and it just happened that I had several relationships with promoters, real estate promoters, and we had several deals and financing also real estate. So I get used to try to understand how this industry works. And well, all these financial analysis and understanding all the cash outflows and inflows that the project may have, and so on. And I liked it, of course, and I had some experience, banking experience in the sector. So there was a moment as that the shareholders asked me if I would like to create an asset management firm that will just suit perfectly in the general wealth management strategy that the bank pursues. So that started actually in 2018, because, well, as you know, licensing a new firm is always something that takes a little bit time. But it was very interesting because I had the opportunity to design from the scratch all the business, and then, of course, with time to adapt to the reality and so on. Well, actually, I was working in another industry, having some more close relationship to this industry, and at some points it just seemed perfectly why not to do something in this area. And well, for the time being, I'm just loving the experience, and I hope that it continues like that. But I think it's a very complex industry. It has many issues that must be always seen very carefully, and that's what makes it so interesting at the end of the day. So I think it's a good industry to be in, and I hope that our audience also finds it interesting and comes in the future.
Thank you, Jose. Alejandro, what made you start a company focused on real estate investing after so many years in strategies, overhauls, and?
Well, for me, it was a very opportunistic decision. we in Spain we had a very big real estate bubble. Between 2012 and 2015, I lived in the US, in Houston. And, for macroeconomic reasons, I made, because, the company, the Texas was undergoing the shale revolution. And I did some real estate investments that, because the economy was booming, did very well. And when I returned to Spain, residential prices in Madrid had fallen by 38%. In nominal terms, in real terms, the drop was even higher. And really, Spain was slowly becoming, 80% of the people were living in their own homes. And, with the new generations, people are renting more and more. And there was very little stock. So, when I started investing in Madrid, you were able to get double-digit returns. So it was an investment decision that was relatively easy. And I was an equity research analyst many years ago, between 91 and 94. That's when I got my CFA. And when I was studying the equity risk premium, they taught us that 60% of the return were coming from dividends. And in 2000, when we had the technology bubble, and even now, the dividend yield in the US is 1.3%. And in real estate, you can get very good returns. So, those are the two reasons that I decided to invest in real estate. It was an opportunistic thing. And I really think that, having a regular cash flow is very important. And real estate, another of the very interesting things, which of course you have to be very cautious, and maybe we can talk about that later, is that you can leverage it. And at the time, we've had an incredible run with 0% interest rates. If you're getting a 10% yield and you're financing yourself at 0%, it's a no-brainer. Now the situation, it's very different, but we can talk about that later. So for me, it was opportunistic.
Thank you, Alejandro. Antonio, do you want to share your experience?
Yeah, sure. Although in my case, it was really unplanned somehow. When I graduated, I had a degree in law and in business, but wanted to go business. And at that point, as perhaps some people in the audience, you don't really know what you want. So I went for consulting, and I spent 5 years in Andersen Consulting at the time, which was part of Arthur Andersen and McKinsey. And at a certain point, and I have to say that CFA was kind of instrumental here. I did my CFA at that time. And you need to decide if you want to pursue a career in consulting or somewhere else in a client or another industry. And in my case, I really like the portfolio management and the investment world. And it happened that I had the opportunity to join ING Real Estate. I had also some friends that were working in the industry. At that time, we are talking more than 20 years ago, the industry was very different to what we are seeing now in Spain and Portugal. We didn't have the CG, the SOCIMI regimes, obviously, but also the number of players were less. We had obviously big names. You have Rodamco, you have Sonai, you have some big names operating in the markets, but the industry was about to be developed. And I joined ING. I really liked it. I like the combination of being this real world, we could say. It's a people job, as Alejandro and Jose Miguel were saying, and you have to interact with a lot of people, but at the same time, it's very technical. By all means, technical on the building, technical on the financial side, and the way you construct the portfolio. And I think it's really a fascinating job. Is if you like real assets and finance, and well, I've been doing it for the last 20 years, and I hope to continue doing it for a long time. So that's a little bit my story.
Thank you, Antonio. So the next question is, if you could you talk about a challenge that you faced during your job, what challenging situation, and I can change the order again. Maybe I can start with Alejandro this time. And how you dealt with the challenge. Talk about the challenge and how did you deal with the challenge? Can be financial, can be.
Well, there is challenges every day. Getting the bank financing, which now is quite hard. You know, looking for investors and but you know, well, you know, I when I decided to, because I used to subcontract absolutely everything, and I decided to hire somebody 1 month before COVID. At the time, I had I was in the process of buying 2 assets. You know, COVID came. They were going to be tourist apartments, and one of them I converted into a co-living, like I mentioned. So you know, I was able to solve that issue, and the other really I realized in the loneliness of COVID that I had made the wrong decision. Making I don't know the word, unas arras. How do you say that, Antonio?
Oof, I don't know, man.
when you signal,
Yeah.
you know, you put some money up front just before you buy it, so you can do the due diligence. And during the due diligence, we found out that the seller had misled us, and the company, I mean, the building had some structural problems. And you know, we had to make a very, very strong negotiation that allowed us to return, to get our money back, and be able to get out of the purchase. So again, you know, negotiation, because you know, and in that sense, I think COVID was a bit of a help. You know, if it hadn't been for COVID, I would probably ended up buying the asset, and I might or I might not have problems, but you know, it's just you know, being quick and making decisions.
Okay, thank you. Maybe Antonio.
Yeah, sure. Well, first, Alirio is pointing out that Arras is down payment, so thanks, Alirio.
Okay, down payment.
Right. Yeah. So, yeah, in my case, challenging situation. Yeah, COVID for sure. COVID was, I think, how to say, a big stress test for all asset classes, in which, you know, the different sector had very, very different performances. But for me, I remember even, yeah, I'd say worst somehow, you know, the global financial crisis between 2008 and 2013. That was really hard for real estate, really difficult, especially in Spain and Portugal, you know, and you had all type of problems that you can imagine, especially in relation to debt. You know, the let's say the risk management was done very different. We had highly levered investments. People started to know about what a bank covenant was, that before, you know, where it was something almost unknown. Problems with the coverage ratios, problems with the loan to value. So problems in the financial structure, and problems that were as well in the assets, because there was a big crisis. So consumption going down, occupancy in all asset classes going down. Not to mention the view that investors from outside Spain and Portugal had about Iberia, which was like, okay, Portugal is going back to the escudo, Spain to the peseta. What is going to happen? Do all type of analysis about the debt, the rent. That was really, really difficult. We saw a market with almost no transactions for 4 or 5 years. Yeah, I think that the ones that were there, you know, we had, it's difficult to forget, and it really, it was so hard that it affects your way of also approaching, you know, and measuring risk and so on. I doubt we will see something like that, but for me, that was the most challenging situation. It was really, really difficult for real estate investors. Really difficult.
Thank you, Antonio. Thank you for sharing that. Thank you. José Miguel.
Well, I believe at this time also COVID, I would say that perhaps most challenging was to deal with some tenants that, of course, were asking for free rents or for rent discounts. And you have, well, to have good relationships with them. But of course, you also have to defend the investors' interests. So I think, well, it was really needed to understand if tenants really have the right to ask for free rents, because some of the business were just performing perfectly, and some just wanted to, well, take advantage of the environment that was well, that could help having these discounts or these free rents. But well, finding the right arguments to say that perhaps it was not completely justified, but by the end of the day, trying to have, of course, win-win solutions and being somehow creative in finding solutions, well, to have these good relationships in the future, but of course without losing value for investors.
Thank you, Jose. Actually, we have a question from the audience. Fernando Lopez. He asks where you would recommend for someone to look for job opportunities in the sector. He's from Spain, but maybe I can ask Jose Miguel to answer about Portugal, Alejandro about Spain, and Antonio about both. I'm not sure if he wants to start this time. Maybe Antonio, you want to start this time?
The question is where to look for opportunities.
Yeah, job opportunities. I'm guessing Fernando Lopez is a young person, so
yeah. Well, I think you have several places. You have the it depends obviously of what you want to do, but assuming you want investment management in real estate, you can have a look at listed companies. You have some large ones in Iberia, and they are normally hiring and they recruit junior profiles. You have a number of funds operating in both Spain and Portugal. I have to say that I think that the real estate industry in general in Iberia is really well developed. You know, we have very good professionals both in the advisory side and also in the investment side. There are very different funds that are specialized and only invest in logistics, funds that I don't know, in my company that we do the different asset classes, different strategy, companies like the one Alejandro has been setting up. So I think, I mean, you have to invest some time looking at it, but I would say have a look at listed, have a look at developers as well, although the job there is a little bit different, or it can be a little bit different depending on the role, and have a look at funds, you know, and funds. As long as you Google a little bit and spend some time on the internet, it will tell you who the funds are, you know, and our peers, it can be Deutsche Bank, it can be AXA, it can be Heinz, it can be LaSalle, it can be Blackstone, it can be BlackRock, it can be Brookfield. You have a lot of names and a lot of investment managers investing in real estate, and most of those that I've mentioned are active in Spain and Portugal, meaning that they have local teams. So yeah, that's somewhere that you can start looking at.
thank you. And would you say that most of these opportunities are announced? So it is just there are job postings, or do you feel that even at an early stage person, a professional, he has to do some networking?
No, I would say that for junior roles, normally you announce it. You post it either on your website, you put it on LinkedIn, and we personally have recruited a lot in Portugal as well, because as I said, we are based in Madrid, but we manage from Madrid, Spain, and Portugal, either with the job departments of the different universities. So yeah, I think it's not like 20 years ago where this was really a niche industry, like, okay, how do I go in? Oh, sorry, I got is much more developed and is well advertised in any of the web pages of the operators. In Portugal, you have some big names like Sonai, like I don't know, I could list some, but I think that for junior roles, yeah, you should have quite some few names to test. Different story if they are recruiting right now or not. That obviously, that depends very much on the availability of capital and the moment of the cycle. But yeah.
Thank you.
I would add to what Antonio has said that there is an industry around the investment side where if you're really interested in real estate and you want to have this connection, banking industry. I mean, the banks are definitely you are having more and more. I don't know so much in Portugal, but here in Spain you have a lot of alternative funding, direct lending funds that are doing real estate deals. You have the appraisals, you have the servicers. In Spain, it's a very big industry. All the real estate owned assets that banks repossess, they are still managing that. Or it can be loans backed by real estate assets. So, like Antonio was saying, I mean, we really have a very, very big industry with very different subsectors that, I have the view that, you can learn almost anywhere. And you mentioned networking. I think it's very, very important to network with all these players so you get a fuller picture of the real estate situation.
And how would you recommend networking to be done? Via LinkedIn, sending messages? Are there any conferences that a person that is out of the sector can join and get to know people?
I mean, in Madrid, you probably have one real estate event or several real estate events every day. You have EY, you have CBRE, you have Savills. I mean, all the brokers are doing presentations, and brokerage is another area. People, you're not going to learn too much if you start selling apartments, but if you go to the people that are providing opportunities for the institutional investors, it's a great place to learn. I mean, you're going to be seeing a lot of opportunities, and you can network. I mean, at the same time that you're trying to sell assets, you're going to be meeting a lot of people. So, I mean, any networking opportunity, I think, is good to be much better professional, and also to be able to develop professional opportunities in the future.
Jose Miguel, do you have any tips as well for someone that is looking for a job?
Well, in Portugal, a young talented professional, I would just suggest that could send me a CV. We are growing. We need to hire talented people. So José Marques at carregosafundos.com. Please, we are happy to try to see if it's possible to work together. So, and yes, and the other, of course, opportunities are quite explained by Alejandro and Antonio, and they're not different here in Portugal. So it's quite the same thing.
That's great. Then you guys are based in Porto. That's it.
We are based in Porto, yes.
Which is a plus. Oh, that's your email in the chat already. Thank you. There's a question from Shinadu. Is asking about the financing side of the business. How easy is to access bank financing? You also mentioned that other forms of financing, and if you could make a comparison for people to understand better, what are the main difference between the financing from your funds or from your firm comparing to an individual when it accesses funds? I don't know. Maybe this time I can start with Alejandro. Maybe.
I mean, like I said, I mean, from my point of view, there has been a very big change in the last 2 years. 2 years ago, people were buying buying assets with very low yields because the financing costs were very low. And now the financing costs have increased a lot. Although, and we all read the financial press, there is this perception that interest rates are going to be falling, so maybe the party will start again. But in my personal opinion, or in my personal experience, I mean, on the development side, because I also develop a residential for sale, where we sell apartments one by one. The banking situation, it's quite tough, and they are asking for very, very, very big pre-sales, that you have a close contract with a construction company, which we've had a very big inflation in construction costs in the last 2 years, and I really think that the situation is getting tougher. I think from what I know is that on the personal side, it's still, if you have a good job and you have a good wage, it's still relatively easy to get a mortgage, and the rates are very, very low, and they are still very low. Of course, they are not the 1% that some banks were giving 30-year mortgages at 1%, but I've heard of people that are even under 3%. So I really think that the financing should not be an excuse on the personal side. On the corporate side, I don't think that there has been enough adjustment on the prices of some assets, and that's the reason why activity in Spain last year fell over 50%. So I think we'll see what happens with the interest rates, but I think that in certain assets there's going to be still some price adjustments, but I don't have the crystal ball.
You go ahead. Maybe Antonio, do you want to talk a little bit about the financing side of the business?
Yeah, I agree with Alejandro. The situation has changed dramatically during the last months or years. I would say that, debt is an important part of the business because we normally leverage investments. I also think that things have changed a lot since the global financial crisis. Managers and also banks are being much more prudent. That's why Alejandro was saying that they are requesting more guarantees in any form, in the debt coverage, debt to EBITDA, whatever. They want to be sure that you will be able to pay the debt. If we have a problem now, it will be more a problem of debt service rather than loan to value, which was the opposite that was happening in the global financial crisis. What we are seeing in the market is that now there is debt, especially for good projects. The problem is that debt is expensive. And we are seeing something that is a little bit a paradox, like Alejandro was saying, which is that sometimes the real estate assets are yielding less than the debt, which is something that, well, how can this happen? This is contrary to all economic theory, to what we studied in the CFA. How can you remunerate more the debt than the equity? Well, the solution to that is only that either the debt price go down or the assets start yielding more, which means that the asset price go down. So yeah, we should see any of those happening soon. But yeah, to complement this also a little bit, let's say that there is a whole industry around the debt, that has been developed also in the last years. I think Alejandro mentioned that you can invest in real estate via equity or via debt. Traditionally, the debt was normally provided by the banks, but there is a growing amount of investment managers providing private debt. We're making a lot of money right now, and because they can finance in competitive conditions. They can go to deals that perhaps due to the risk profile the banks are not willing to go. They go for a price, obviously, but also that is a very interesting angle, and it's not all about investing via equity, but also via debt. But yeah, I would say that debt is there, but as of today, obviously, is you have to pay a price. So you need to do the numbers and the calculations very, very well to ensure that the debt is accretive and not dilutive.
Okay, thank you. Jose Miguel, do you want to add something regarding the debt side of?
Well, with the new regulation here in Portugal, the regime de gestão de ativos, the known RGA, now it's clear that funds may issue bonds, which was something that was not clear in the past. So you only had the option to finance yourself through the banks, and so I believe that in the future you may find here other sources, and that's of course interesting for all the industry. But well, our experience tells us that it's still quite easy to finance real estate here in Portugal with the banks. If you are conservative in terms of the LTVs, the loan to value ratios you use, and of course, debt service coverage ratio. Actually, we feel that the banking system still lacks to finance real estate because it's seen as having a quite low risk. If you are talking about commercial real estate that has good tenants and has cash flows to pay the debt, and we are still seeing some ability to have quite low amortization obligations. That means having balloon payments with some dimension. So I feel that here the cycle in Portugal is a little bit different from the cycle of real estate in Spain. Residential is always very important in putting the tone, and because in Portugal we have a lack of offer, prices are still stable or even growing slowly. So I believe that the environment for real estate is a little bit different for the instance. And so what I feel is that banks are still supporting the financing of real estate. Well, and let's see how things evolve. But if you are always quite conservative, and if you understand at some point, of course, interest rates may increase. So if you were conservative at the beginning, you should not have too many problems with that. And also, what we have faced the last year is that, of course, banks want you to mitigate interest rate risk. That means that you have to buy a cap, or you have, of course, to have a fixed rate or something like this, which is not a bad decision, because long-term interest rates are still, I would say, friendly for real estate investment.
Okay, thank you, Jose. It's 6:30, but we have one more question. I think it should be a short one, if you don't mind. It's from Matilde Poliani. She asks, as a non-Portuguese speaker, or as a person that does not speak the local language, either Portuguese or Spanish, is it possible to start working in the sector? If so, in which kind of roles? My guess, without being from an outsider, I would say probably research. Maybe if you could answer the question, maybe Antonio, would you?
I mean, I think it is. I don't know if you're based in Portugal or not. Actually, you need to speak English, and in this at the end, even if you are doing financing in Portugal or in Spain, you will draft the documentation in English most likely. Then you go to the notary, it has to be in Portuguese, it's being read in Portuguese, and you need to understand Portuguese, or at least tell to the notary that you understand Portuguese. But I think, yeah, it's a case by case. Personally, in our case, we had a number of Portuguese people in Madrid, but there are a lot of Spaniards also traveling frequently to Lisbon, Porto, Aveiro, wherever we have our investments. and we are not all fluent in Portuguese, obviously. You know, in fact, I'm embarrassed because I've been working in Portugal for 20 years. I cannot speak the language well. I can understand, but you always team up with local partners. And I would say that for some roles, obviously, if you are going to work in direct contact with tenants, you are going to be involved in negotiation. You cannot expect everyone to speak English. It's not the case. If you are more on the investment side, more institutional, dealing with institutional investors and with large banks and so on, then at that level, everybody speaks either English or Spanish, because again, you know, when I go there and I try to speak Portuguese, I'm being stopped in minute one. I say, okay, let's shift to Spanish because we can all speak Spanish. Okay, so I think it really depends. But in Portugal, you're all very well very good with languages, much better than us here in Spain.
Thank you, Tony. Maybe Alejandro, in your case, yeah, we have to speak Spanish to do your business, right? Alejandro.
Well, I mean, we're much local. I mean, the people that work with me speak English, but at the end of the day, we are mostly using Spanish. We are in the process of teaming up with some institutional investors, and definitely will be only English. Although it's a program to invest in an asset, in a particular asset in Spain. I mean, everything is going to be in English. So, I mean, there are plenty of opportunity. There's plenty of foreign money willing to invest in my case in Spain. I don't know about Portugal, and definitely, you know, if you're talking with institutions, it's 100% English.
Thank you. Miguel, is it possible to work at your firm without speaking Portuguese? Is any role for that, or?
Well, if you start at the same point to learn Portuguese, it is. But of course, it will be important to speak Portuguese. But I would say that you could start, but of course also try to learn as quick as possible the language, because that will create more value and it will be very useful for this profession, of course.
Thank you. It's already 6:35, so the time is already past. I would like to thank everyone, Alejandro, Antonio, José Miguel, also CFA Society Spain, and all the attendees and universities that partnered up with us. Thank you so much, and I hope to see you in some CFA event in the future.
Okay,
Thank you very much.
Thank
Bye-bye.
you.
Have a nice day.